So with the market shift over the last 6 months, non-conventional mortgages are back on the table. Today we're going to break down all of the requirements for FHA Loans 2023 and why you might benefit from applying for this kind of loan. Hello Central Maine, welcome back to the channel. It is your realtor Nick Isgro with eXp Realty. And like I just stated at the beginning, today we're going to go over what are the FHA loan requirements for 2023 and what differentiates this from a conventional mortgage. Why would you want to take advantage of this mortgage? How does it benefit you? We're going to break that all down. Now, before I do that, I want to welcome you here to the channel. If you've never been here before, we cover all things real estate here in the state of Maine, but particularly right here in the Central Maine market. If that's of interest to you or adds value to your process in the buying and selling of homes, do me a favor, go ahead and like this video, hit subscribe, knock that little alarm bell. You'll be notified every time we put out new content. So let's kick this off right out of the gate. If you have super good credit and you have 20% to put as a down payment on a loan, this may not be the loan option for you. However, if you don't have the most perfect credit, or if you just don't have a ton of money for a down payment, the FHA loan is a loan product that has helped millions of Americans get into a home in that exact same situation. So what differentiates the FHA loan from a conventional? Let's break this down one by one. The first and most obvious point is going to be your credit score. In most scenarios, to get a conventional mortgage, you're going to need at least a 620, 630 credit score or above, and that's kind of just the base qualifying part. With an FHA loan, you can have downwards of a 500 FICO score and still qualify for the loan. Now, I want to put this hand in hand with the second piece of this, which is that it requires a much lower down payment. Now, most mortgages, you're going to have 10% down. Most conventional mortgages, 20% would be standard. The FHA loan is a 3.5% down payment. That's why millions of people are choosing this loan options. However, there is a little bit of a caveat here with that. Now, if you are below a 580 credit score, you're going to need a 10% down payment. So if you're between 500 and 580, you can still qualify for all of the other benefits of the FHA loan. You just need a little bit bigger down payment. That would be 10%. But if you're 580 or above, you qualify with all of the other things you need to qualify for. 3.5% would be your typical down payment for the FHA loan. So there is a little bit of a downside with that lower down payment, and I want to make sure that we're covering both the pros and the cons of this loan type. With an FHA loan, pretty much every FHA loan is going to be required to have mortgage insurance premium. So a mortgage insurance premium is a premium you're going to pay on this loan no matter what you put for the down payment, and that is just somewhat of an insurance policy since this is a loan that is backed by the Federal Housing Authority. So backed by the federal government, but federal government also putting a little bit of a premium in there in order to make sure that they're hedging against any future charge-offs on this loan type. So another reason that you might consider an FHA loan as opposed to a conventional mortgage is that it does allow for higher debt-to-income ratios comparatively to your traditional conventional loans. So with the FHA loan, it does allow for up to 56.9% debt-to-income ratio. So if you have a higher debt level, you don't really qualify for some other loan types, this is a way you might be able to qualify for that. Now, as a real estate advisor here, I do want to say that, it's not always important that you go for the max payment, because when you get pre-qualified for the mortgage, they're going to say, here's what you're qualified for, and they'll give you basically, up to a certain amount. It doesn't mean you have to go that high. And I always want to put this in here because when we're talking debt to income ratio, if you're at 56.9%, maybe the largest payment that you qualify for makes sense for you based on what your pay down schedules are, and what your other obligations are for the month. As far as your finances, but it might not make sense. So that's something you always want to look at. A lot of people get the amount that they're qualified for and they'll go right out and just say, here's, the kind of house I want to look for is up to this amount. That might not be the amount that you want to look for. Look at what the actual payment's going to be when you get your loan estimate and determine what your monthly income, what your monthly expenses are, not just the fixed debt payments, and see what makes sense for you personally, because you just want to keep yourself in a position that's comfortable so you're not stressed out every month trying to make that payment. So you've heard a couple of the reasons why the FHA loan might make sense for you. Lower credit scores, higher debt to income ratios. There are a couple of things though that you want to keep in mind. That is that you do have to have a 2-year work history, and that work history has to be documented. You have to be able to show proof of the work history as well as your income. So count on the bank asking for proof of 2 years of full-time work history as well as some documentation showing your income and a history of the income that you're claiming. And don't forget also that mortgage insurance premium that we said was added to the loan. So that is really it for today. Just a quick down and dirty, what is an FHA loan? How do you qualify for it? What are the advantages? What are some of the disadvantages? And does this make sense for you? At the end of the day, you're the only one who can answer that question. But I will say, the great news is right now in the market, particularly here in central Maine, with longer market times, fewer buyers in the marketplace, more housing available than there was a bit ago, buyers and sellers are coming back to the negotiating table, and finance contingencies are definitely one of those things that are back on the table and not really scaring folks away if it looks like it's a strong offer. So if you're a buyer, you've been sitting on the sidelines because of something like the financing piece, and this is something you qualify for, please, by all means, take a look at it, talk to your lender, and see if this makes sense for you, because this could be a great time for you to hop into the marketplace and take advantage of the current market. Now, of course, if you are in the market, or maybe you've been in the market and you've used an FHA loan product, or you've talked to your lender, by all means, drop a comment below. We'd love to hear what your experience is, whether you're on the buy side or the sell side, accepting some of these offers. Also, if you're thinking about looking for an FHA lender and you're just not sure who to reach out to, please reach out to me. All of my contact information is linked in the post below. I would be happy to give you a referral to one of the many wonderful lenders that are in my network who are very experienced with this and could walk you through the process. Of course, as always, I thank each and every one of you for sticking around to the end of this video, and until the next one, I'll see you next time.